And it's the midweek edition for Business Morning, coming to you live from Channels HQ. Good morning, good evening, wherever in the world you're watching from. Great to have you share your morning with us. Let's take a look at some top stories and what's happening in the oil market now. We see oil prices fell today, reversing some gains made after Saudi Arabia and Russia announced they would extend and deepen output cuts into August as concerns over global economic slowdown weighed on market sentiment. Brent crude, that was down by 46 cents. To $75.79 a barrel after climbing $1.60 on Tuesday. U.S. WTI crude futures, that was at $70.87 a barrel, up about $1.08 from Monday's close. We've been traded through a U.S. holiday to mark Independence Day without a settlement. Traders will be looking for demand cues from industry data on U.S. crude and product inventories from the American Petroleum Institute later today. And government data, that's tomorrow, both delayed by a day due to the U.S. holiday. We'll definitely be looking out for all of that. Right here, we see the Debt Management Office has announced, has listed two federal government of Nigeria savings bonds for subscription for this month at 1,000 naira per unit. According to a statement by the DMO, the first offer is a 2-year FGN savings bond, which will be due on July 12th, 2025. Offered at a rate of 9.07% per annum, while the second offer is a 3-year FGN savings bond due on July 12, 2026, and offered at 10.07 interest rates per annum. The opening date for both offers is July 3rd, closing date is July 7th, while settlement date is on July the 13th. This initiative by the debt office aims to provide investors with an opportunity to earn competitive interest rates while supporting the country's economic development. And the Federal Inland Revenue Service announced its plan to collect and remit value-added tax from traders, especially those in the informal sector, to be achieved in partnership with the Market Traders Association of Nigeria using a unified systems technology. For more now, joining me is Mr. Taiwo Oyedele, Fiscal Policy Partner and Africa Tax Leader at PwC, joining me via Zoom. Great to have you on the show. Good morning.
Good morning, Ladi.
So this is what experts have clamored for the longest time now, and it's here now, and it definitely would need some, understanding to know how it's going to work, because we know most of the time these traders have pay illegal, taxes to some non-state, actors. So what happens now that the federal government is going to be collecting most of the VAT from these traders?
Yeah, thank you very much. I think the starting point is just to remind everyone that the VAT law has always been in place since 1993. So this is not a new law. It's just the FRS looking for a collaborative way of trying to, drive compliance. Because the tax authorities, by the way, they have the power of the law. They can enforce it. But I also like the idea of entering into a partnership so that it is, it's collaborative. So what they are trying to do is to go to traders to say, you have VAT obligations, and I'll try and clarify instances where that will be applicable and where it will not. But let's help you simplify the method of compliance. And as part of the sweetener, or you can call it the carrot, government is saying it will help you to ward off the people who extort money from you. We call them informal taxes, but to be honest, they are not taxes. They're just tout harassing traders who are doing their legitimate businesses and taking money from them for which they receive no benefit and no fiscal exchange whatsoever. So what the FRS has done now is to use the platform of MATAN, that is the Market Traders Association of Nigeria. According to the report, they have over 40 million members. I would doubt whether they will get 40 million people on their platform, but whatever that is, they want to then encourage those people to use a platform that MATAN had created, a digital platform where they're able to capture the revenue, the turnover of these of their members. So bear in mind that this kind of businesses, majority of them will not have the capacity to keep records. So you can't ask for a lot more than just their turnover, which every business would know. then use that platform of Matan to then interact with the FRS's platform. Now, it's important to note that the Finance Act, a couple of years ago, had provided an exemption threshold such that if your annual sales is not more than 25 million naira in a year, you don't have to pay VAT on your sales, whether that is goods or services, whatever it is that you're doing, and your turnover is less than 25 million, you're completely exempted from charging VAT and remitting it to the FRS. And I think that more than 90% of these traders will fall into that category. In addition to that, you have items like basic food, you are selling rice, you are selling beans and yam, or medical materials or educational materials. All of those are also exempted regardless of your threshold, even if you are selling 100 million naira a year. That would also be exempted. Now, if you don't fall into those categories, and also there's another category where the manufacturers would have charged VAT up to the end point, like telcos. Telcos will tell you how much to sell the airtime, and they've accounted for the VAT to the FRS on the retail price. So the retailer of the recharge card or airtime does not have to do anything for VAT. Now, if you don't fall into those categories, maybe you are selling mobile phones, laptops, then you have to account for VAT. Also important for you to note that in that instance, you'll be entitled to claim an input credit for the VAT when you were buying those things you are selling, such that the impact of the VAT you now have to pay to the FRS under this arrangement, where applicable, will be very minimal.
All right, Mr. Italy, is there a risk, because this time now, the federal government is going to be collecting, this VAT, but is there, some kind of risk that these traders will want to pass on, this cost to customers? Is that a possibility?
100% likely. 100. In fact, this is my own worry about this whole arrangement. And we have a lot of examples around us to justify this fear that we have. And the most obvious one is the subsidy removal on petrol. So subsidy was removed on petrol. Prices went from around 200 to around 500 on the average. And then many of the transporters just increased their fares by 200%. There's no logic to support the fact that if petrol price goes up by 100%, transport fare must go up by 100%. How about the other costs that go into it? So people generally can exploit any opportunities like these to do whatever they want to do and blame it on the arrangement they've signed with the FRS. Based on my own analysis, if your margin, so like I've said, more than 90% of the traders will not have to charge VAT at all, so nothing will change. For those who have to charge VAT, if your margin, that is the profit you make, is about 10%, right? You buy something for 100,000, you sell for around 110,000 thereabout. You're only charging 7.5% VAT on the 10,000 profit. So 7.5% of 10,000 is going to give you less than even 1,000. So which means for that thing you are selling for 110,000, just add an extra 1,000 and you'll be fine. So these amounts will be negligible if the traders are well educated about how this should work out and they do not take advantage of the people in the process. Then the impact will be negligible, if at all applicable, which will not be the case for most of the items. If you're buying food, there'll be no impact. You're buying notebook for primary schools, there'll be no impact. You're buying medical items, no impact. You're buying fertilizers, no impact. The vast majority of things you buy will have zero impact.
Right, I guess the traders need a lot of education and even customers too, and everyone should know their rights when it comes to this, getting the informal sector into the tax net. Thank you so much, Mr. Taiwo. You're the Fiscal Policy Partner and Africa Tax Leader, PwC. Thank you so much for coming today.
Thank you.
All right, so there, we're talking about tax back there now, but Princess Trust International has officially launched in Lagos, Nigeria, with a resolve to help more young Nigerians achieve their dreams. Following that launch, the organization has also organized a career fair for job seekers in collaboration with the Nigerian Employers Consultative Association and Field of Skills and Dreams. For over 40 years, Prince's Trust International is focused on delivering education, employability, and enterprise opportunities for young people spreading across the globe. Our correspondent, Dari Dowu, reports.
Access to finance to MSMEs. We give out across several categories.
Prince's Trust International continues to give young people from the country a new avenue to access sustainable and long-term employment, and this event is another effort at sustaining that tempo. The launch of the organization in Nigeria also comes with an opportunity for job seekers to meet employers of labor.
For this job fair, we had 3,891 applications, all on file. And as is custom to us, we had to go through various processes to screen out so many people just to be able to get about 120 applicants in here today.
The event breaks into panel discussion, with each of the panelists sharing practical experiences that could help prospective employees navigate the labor market. A cohort of young people already received training, allowing them to work as solar technicians, caterers, fashion and textile designers, as well as receive mentoring from employers within their chosen fields.
My first job to be employed was after I did the program. Before then, I was learning different skills, applying to jobs, and no one was calling.
In Nigeria, where the unemployment rate stands at 33.3%, the organization says it is identifying gaps in core knowledge, education, and other employability skills for young people to thrive.
There's a jobs gap because the demographic changes, the numbers of young people mean that many will have to work in the informal economy. There's a skills gap because in Nigeria we know 10 million young people don't have an education. Many others leave school without the skills for work. And there's also an experience gap because employers say you can't get a job until you've got that experience, but young people can't get the experience because they can't get a job. And the thing about Prince's Trust programs is that we aim to close those gaps through programs that focus on the core skills that young people need.
We use local partners, so that allows you in a country like Nigeria to basically scale very quickly around the country. The second is we focus on skills that, whether you're an engineer, a medical doctor, an entertainer, a sports person, an administrator, those skills are important. It is problem solving, it is focusing on your values, it is building resilience, it is communicating effectively, and those life skills that are important in every part of your journey.
The PTI, founded by King Charles III in 1976 to tackle the crisis of youth unemployment, helping them to start careers, launch businesses, and renege with education. Dari Idowu, Channels Television News.
And now to our next conversation. With removal of fuel subsidy, Nigerians have felt pressure having to pay over 100% more to fuel at a time Nigerians still depend heavily on fuel for powering generators and cars. Everyone's talking about Autogas as a cheaper alternative. Let's dig deeper now. Is it just any kind of gas that can power your cars? Let's talk to Mr. Felix Sekundayo, President, Nigeria Liquefied Petroleum Gas Association, joining me right here in the studio. Great to have you. Good morning.
Good morning, Ladite, and thanks for having me back.
Fantastic. So there are quite a number of gases. Yeah, I see we have natural gas, we have LPG, liquefied natural gas, and there are different types also of LPG. Yeah. So at the end, I'm wondering, is it just any gas I can use to, power my car or generators? Because that's a new hype right now. The cost of living crisis is affecting everyone. We need a cheaper alternative, but can we just use anyone?
Thank you very much for the question. And that has come up a little bit. There's some confusion in terms of in the minds of the consumer, what gas really means. So if you were to say, if I say, oh, I run my car on fuel or oil, you will ask, we're all discerning enough to say what kind. Is it diesel, is it kerosene, is it petrol? So with gas, there are a variety of gases, and what we wanted to do in the industry is to clarify so that we can bring to the consumer better information as to what the pros and cons are of each type of gas, and then they are better informed in their choice of what conversion system to use. So together with, as the NLPG, Nigeria LP Gas Association, and along with the Nigeria Gas Association, who's responsible for a different type of gas, as well as local distributors of gas association and the LCCI, Lagos Chamber of Commerce LPG Group, we decided to collaborate and come up with an infographic to explain to people the fuel side of the business. These are the gases that are available. These are the applications that they can be used for, and what are the benefits or downsides of using it for your type of fuel. So that we published.
Yeah, I remember on social media, I could see people connecting the gas canisters to the generators.
Yes.
I'm wondering, can you use my cooking gas?
Yes, we can, but there's a caveat to using cooking gas. So a number of years ago, the Standards Organization of Nigeria did a very good job, or a great job, in defining these gases ahead of their own expectation of the rollout of the gas policy as it exists today. The gas policy as it exists today makes provision for 4 areas: power, autogas, industrial, and domestic. Unfortunately, prior to now, we've only focused on the domestic. But they had done their homework in terms of what do we need to do to make these ready. Now, cooking gas itself, what the moniker that we have for cooking gas, is suitable today, but the definition of it allows other components to be put in, which in future may not be suitable for use in your generator. So we've said, look, there's a caveat to using this particular type of gas. It is no different than, say, it's still LPG, but it has some components in it that may not suit your generator. So when the refineries come in, they change the composition slightly, and that's what we're trying to warn against. So it's like taking Coke Zero or Diet Coke. You choose whichever one is suitable for you.
Exactly, and for your car and for your generator, I guess. So let's look at infrastructure now. The infrastructure available is suitable for PMS, transporting, getting to where you can actually buy. Mm-hmm. So where are we now, with infrastructure for, gas? Okay, so
there's the danger of seeing this as the silver bullet, right? We've gone from fuel subsidy, then we're just going to rush to gas. Unfortunately, the groundwork hasn't been done. The fuel side is sorted, the infrastructure side needs to be sorted, and more importantly, the policy and regulatory side needs to be sorted. So in terms of infrastructure, we have the gas bodies that have infrastructure for supply and distribution to one segment of the 4-sector market I mentioned to you before, domestic. We need to now collaborate with the players who have infrastructure that deliver in the 2nd sector, which is Autogas. And those players are the downstream marketers today. So there are many associations in that regard, and everyone is positioning. Our view in the gas sector is this. Look, it's not a winner takes all, right? We need to collaborate. We need to stop confusing the populace and policymakers. We come together and we enumerate and elaborate what we want, right? And what can be done. Across the country, these different gases will have their uses. We don't see you going to I don't see anybody going to a location and say, this petrol station only sells kerosene, right? You have different fuels available. They should be able to, we should be able to do the same with gas fuels. So it's a case of, look, if you're in Gombe, what is suitable? What are the fuels that are suitable to you? If you're in the middle belt, if you're in the east, right? What fuels are suitable to you? That's the narrative we want, as opposed to this winner takes all. It's only this type of gas that we want to use.
And, definitely everyone's running to gas now, or trying to run to gas because of, prices of PMS. So when, everything is all, set up, infrastructure, and, demand, sets in, is there a risk of, gas prices actually, going up?
Yes, there is. As with anything, as demand goes up, you have the challenge of prices rising. However, we've had a situation where gas prices have been unnaturally low, in our view, okay? That depression of prices doesn't encourage investment in infrastructure. If you can't make your returns, you are not going to invest. So we need to have a balance whereby, look, there are investors who will come in, build the infrastructure, and consumers are willing to pay, and they recognize that, look, they are going to make savings against fuel, the current fuels that they use today. So yes, but in truth, a rise in prices is not necessarily a bad thing if it improves supply.
And Devil, I got that report earlier that this is the hottest time, right now globally, and definitely we all have the net zero plans, at this point. Is this clean? Is gas clean enough, to help us meet those needs?
For our perspective as the NLPGA, that is a robust yes. Right? Gas is clean. Gas is, it reduces the impact on health amongst the poorest and most vulnerable population. It is abundantly available here. And when you look at, we need to be careful on the narrative of this net zero. It's net zero, it's not zero, okay? So there will be some that will be above, there will be some that will be below. When you look at the OECD data in terms of developed economies and so on, and globally, 50% of energy by 2050 or 2060 will still come from gas. Why would Nigeria, as a gas-rich nation, be below 50%? So the narrative is not there yet in terms of should we be cutting back or not. We are not there yet. Let's use what we have to develop what we need to.
All right, talking about supply, now I'm guessing we would not have supply issues going forward with gas.
That's a qualified yes. And why I qualify the yes is this. Right now, we have more than enough infrastructure to supply what we need, the immediate demand. But as we grow demand, of course, we need to put in more infrastructure. Of course, we need to make sure that supply can reach the new demand areas. And we need to be sure that regulation and the legislation suits the market that we want to develop, right? At the moment, it is barely fit for purpose. We need to be sure that we can roll out faster than we have done. Our view is very simple, right? We have a narrow window in which to do this. And therefore, the narrative needs to, or the rhetoric and the narrative needs to be matched with action.
And how big are the opportunities in the value chain?
I always say, so I give a lot of talks on gas, and I always say that right now we are still rudimentary in terms of our discussion on gas. We're still talking of primary level of use of gas. Buy it, burn it, generate heat, generate power. We're not really moving on into what we would need to be discussing as a developing or a developed nation. What can we make from the gas? What can we manufacture from the gas, right? In terms of agrochemicals, in terms of plastics, virtually all the things we use today, smartphones, windscreens, are made from gas products. We're not even discussing that. We're just talking about the primary use of gas. But first of all, we need to crawl before we walk, before we run. However, you must have a view to say, once I start crawling, what do I do next? And that conversation is not happening at the moment.
Well, we'll definitely have to have that, conversation. But another tough one right now is definitely the cost of living crisis.
Yes.
Nigerians are squeezed. Your disposable income is, attacked from every corner, right now. We've been battling inflation since 2022. So tell me about palliatives now, with this whole gas adoption. What kind of palliatives can we expect?
Right. So the reason that, so we put out an infographic, as I mentioned earlier, and the last page of that infographic talked about palliatives. It was a suggestion. It's a presumptive suggestion, but it's a suggestion nonetheless. Why did we make the suggestion? Simply because in our discussions, in our consultations, what most people are feeling is the pain of the rise in prices, inflation, and so on. So therefore, we can say, look, these are the areas where we think we can maximize impact. How do we get people to start using, those that are feeling the cost of a rise in petrol, what can we do for them? Those that are feeling the cost of a rise in diesel, what can we do for them, and where to apply it? Because if they have to go and find capital to do this, again, that's a problem. Those are the industry-type palliatives. Of course, you then need the consumer-type palliatives, which no doubt the government is working on, and we can make propositions on, but we have to be at the table.
Because at the end of the conversion is going to cost you money.
Correct. And who's going to go and dig into that at the moment when they're struggling to buy food, right? So we have to find a way. You can't grow demand if you don't put in these palliative measures or these support measures to grow demand and support those that are willing to consume gas.
What are you seeing for gas adoption, say, in the next 5 years in Nigeria?
Certainly, we've made predictions in the past and we've always fallen short. Why? Because the infrastructure and the policy side has never met up. We predicted that we were going to be at 5 million tons. Probably that target we've gone beyond by 6-7 years. In terms of we are behind it. We're only at 1.5 million tons when we should be at 5. So I would say that if we do things right, in another 4 years, we should be at that 5 million tons. And that's on the liquefied gas side. Then you now have the pipeline gas side as well, which has its own growth projections.
And we also see EVs going into electric vehicles, so it'd be great having multiple options. You know,
correct.
I could use PMS if I want, I could use gas, or I could just charge my car and just drive it.
Precisely. If we want to keep referring to ourselves as an underdeveloped nation, we keep talking about petrol, gas, this. If we want to be talking about ourselves as a developing or a developed nation, we need to talk about energy, right? It is what form of energy do we need? Yes, those that prefer EVs, those that prefer electricity will use electricity, and they should be able to use electricity, right? Those that prefer to use gas or need to use gas should be able to use gas at an affordable price. And same for liquid fuels, right? But we need to talk about energy in a holistic manner as opposed to these silos that we currently have.
Exactly. Thank you so much. It was great having your perspective today, Mr. Felix Ekundai, President, Nigeria Liquefied Petroleum Gas Association. Thank you so much.
Thank you very much, Lady. Okay.
All right, we'll take a break now. When we come back, AFEX Commodities Market Update is next. Do stay with us. This is Business Morning. All right, let's take a look at how your money performed in the AFEX Commodities market there. We see was mixed performance across key indicators. Turnover dropped by 69.16%, closing the week at 1.77 billion naira from 5.74 billion in the last trading week. Volume of deals traded dropped by 70.19%, and number of deals traded also dropped by 39.44%. Closing at 109 points. There's an increase in the AFEX Commodities Index as it rose by 0.43%. The AFEX Export Index also rose by 0.03%. Marginal increase there, closing at 228.71, up from 228.64 points in the last trading week. To the volume of contracts traded now this week, we saw no increased volume across commodities. Price across export commodities, sesame, wheat, and sorghum maintained at 1,247 naira, 380 naira, and 282 naira, respectively. Other commodities saw mixed performances, with ginger rising by 0.33% and closing at 989 naira, 83 kobo. Cashew nut rose by 0.10% and closed at 612 naira, 87 kobo. Cocoa, that dropped this week by 0.17%, closed at 1,882 naira. Soybean fell by 0.23%, closed at 334 naira, 3 kobo, while paddy rice fell by 0.27% to close the week at 335 naira. Cross grain commodities, we see maize rose by 2.45% and closed at 280 naira, 30 kobo per kilogram. For more information, you can visit the website there, AFEX Commodities, africaexchange.com. You can follow them on social media at AFEX Nigeria and COMEX by AFEX. All right, taking the conversation forward now, see sustainability has been a key focus area in the commodity market, particularly with how integrating sustainability into financing can boost growth and create long-term profitability for investors. We'll try and get Halima Sulaiman to come and tell us more about that. But at the end of the day, finance is very important to sustain that commodity exchange. And also, if we can just go back there, we see that it was quite not a bad week, the market there, with the increase of volume across some commodities. We see sesame unchanged there, 1,247 naira there. And also, we see other commodities looking quite good. We see the global wheat market there Wheat not looking bad here, 380 naira. We're seeing the wheat, global wheat market, wheat did drop this morning, and we did get that information from Russia saying that they might not stick to the deal. And everyone's still, watching that Black Sea grain deal right now. That's definitely pushing sentiment with traders, trying to find direction for where wheat is going to go next. So right here, we're still seeing 380 naira. Let's try and bring in Halima Jumoke now, Associate Financial Market at AFEX. Halima, great to have you if you are there, seated.
Hello everyone, thank you, and I'm happy to be live here on Channels Television. Good morning, my name is Halima.
Fantastic.
Thank you.
Fantastic, Halima. Thank you for joining us. So what is the place of sustainability in financing in these commodity markets?
Thank you so much. So the Nigerian commodity market largely has about $1 trillion untapped opportunities. And these commodities include the agricultural produce, which includes our today's consumptions in the form of foodstuffs and other industrial produce. We also have commodities in the form of gold, and we also have the oil and gas. However, to further diving into the question for further clarity, to drive the sustainability markets, we need to reduce the perceived risk in that sector, whereby people need to collaborate in the form of employment, creation of infrastructural gaps such as accessible roads, warehousing infrastructure, and also creation of financing opportunities for lenders and borrowers to meet. So we need to work more on the perceived risk in the agricultural ecosystem, and also creating more sustainability drive in the form of government policies like we have now, like the previously concluded Agricultural Borrowers Program, and also driving education on climate change, both in our households and in the general environment.
All right. So how does the integration of sustainability in the commodity market contribute to the overall stability and growth of the financial market?
Thank you for your question. So like you earlier mentioned, and the few points I earlier mentioned talking about de-risking, talking about de-risking perceived risk behavior in the commodity ecosystem. So we need to work on those policies, which are infrastructural gap deficits rather. So firstly, we have to create accessible road networks for consumers, which are like the farmers, for them to have their produce meet from one place of location to the aggregators or the final consumers, or even the investors. So we need to have infrastructural structures put in place, such as accessible roads, warehousing system whereby all the agricultural produce that have been made can be well stored, and also helps to further drive investments in the form of increasing storage behavior in the agricultural ecosystem. Largely in the Nigerian agricultural commodity and ecosystem, we have a major problem of having so much produce going into wastage. So we have to look at sustainability produce in the form of innovations, and which we have like the warehousing receipt system and all of that made to create longer storage system for produce that have been made. We have to increase education and also encourage investors to put more funds in the ecosystem.
All right, so what are some of AFEX's strategies to integrate sustainability in financing?
Pardon?
What's AFEX, doing, at this time? What strategies are we seeing, coming from AFEX to help integrate sustainability in financing?
Thank you so much. So AFEX has a 5 years impact sustainability report, which basically focus on building a huge sustainability platform across. Now we started with the Pan-African region, and we're looking forward to going global. So what are these sustainability platform reports? We're looking at employment of agile people into the agricultural commodity markets. We're looking at driving education in the form of letting farmers have financing education and restructuring the commodity system and also the agricultural ecosystem. And we are also creating innovation and technology in the form of storage. Storage is very important in the commodity exchange system. So we've also created more warehouses to be able to preserve the produce that have made to be able to last, and also we're also creating other investors program and products in the form of asset backed commercial papers, which has been done in the past, input financing and all of that, to also give investors competitive returns while by preserving their capitals. And we've also done a lot that has been oversubscribed in the recent times.
All right, Halima, thank you so much. I do hope next time we meet again, you have a more quiet environment. But thank you so much, Halima Jumoke, Associate Financial Market at AFX. Thank you, Halima.
Thank you so much for having us.
All right, we'll take a moment now. All right, now let's head on to the markets. We have Will Ibong with the details. Good to have you, Will. And yesterday morning, saw a drop.
Yeah, dropped the market. A lot has been
Nothing
happening.
to see here, right?
Yeah, no, there's a lot to see in the market. We've seen, I just, some news coming in from the NGX yesterday. Right. I'm just going to start off with that. We did see the half-year review of market indices. There's been some reshuffling of, some of the stocks from, the indexes that they have been, trading from or where they've been placed. This is the NGX 30 Girigu coming into that, NGX 30, and custodian investment leaving, and Wema Bank also exiting that index. Consumer goods for none. We see also for NACO coming into the Lotus Islamic Index. That's very interesting. Tomorrow we're going to have the detail. Yeah, a lot of moves going on there. So a lot is happening at the NGX. You see the market's on fire. Stocks are trading.
Even though we saw that loss yesterday, but the market is still on fire. Yes, it's still
definitely on fire. We need to have a positive market breadth. Yeah. And then if you look at the market, you see that stocks that have been trading below their fair value, below the market value, are starting to pick up. So that shows you.
You know what I love about pullbacks? Pullbacks are just that opportunity
for people to come in.
But you know how human emotion, trading, not easy.
We're just going to move on the fixed income front. We saw the bond market, opening yesterday's trading on an active note, but we saw sell interest across the curve, improved offers on the long end of the maturities. Offers were observed for the shorter bonds, but let's say the average yield still closed on a stable note. Treasury bills, we did see mixed trading, mixed performance there. We saw that the average yield kind of declined. Some bullish momentum coming in and picking up in that space as well. But we have not seen so much change as to why yields are still dropping in the market. But we're having Ramat Baba, she's treasurer, FBN Quest Merchant Bank. She's coming in to share some insights as to what's happening in the market. Good morning, Ramat. It's good to have you on the program.
Good morning. Thanks, Will. Thanks for having me here.
Ramat, let's talk about the direction of yields in the fixed income space. We've seen the downtrend, even though we've seen a slowdown in CRL debits. How low do you think these yields will continue to go?
Okay. So it's just we expect mixed reactions to really continue in that space. And it's basically because on the treasury bill space, that market continues to be influenced by liquidity in that space. System is currently very liquid, in excess of 700 billion in the system. So, of course, we expect to see banks and other counterparties picking up treasury bills to utilize their excess liquidity. While in the bond space, we've seen market trending in the same direction and yields, of course, going lower in the last 1 or 2 weeks. But yesterday, we started seeing more reversals in that. And that's really because there's an auction coming up in a couple of weeks. And a few market participants decide to go short on some of the maturities on auction, just to take advantage, really. Direction of yields, how low do we expect yields to go? We think they might really still go lower as long as liquidity remains in that space. And of course, again, we've not seen the pension funds come into the secondary market to participate. If they come in, we expect yields to go lower. But if this just continues, if it's business as usual, we might continue to see a bit of reversal on the bond space. But of course, we also have to remember that there is limited supply in that space, really, besides the auctions.
Yeah, so I'm just still trying to wrap my head around it. I understand what's happening, but just why do we still see, especially with the high inflation rates and high interest in operating environment, when are we going to see that change in direction? When do you expect it to change, Ramat?
I think the MPC should provide more clarity because of where the MPR is fixed currently. Yes, inflation continues to go higher, but the question is, what are the alternatives for investors really besides the equities market? So for those in the fixed income space, there's limited supply for them. So we see a few of them continue to pick instruments in that secondary market space. And of course, to the extent, like I mentioned earlier, as long as there's so much liquidity in the system, we expect interest rates to remain low. And if banks keep turning off liquidity or keep pricing deposits lower, investors will have no alternative but to go into the fixed income space for treasury bills or bonds.
Okay, Ramat, we've also seen the central bank reintroducing the FX futures contract. We know it was suspended a couple of weeks ago. What has changed from what was previously offered? Can you explain to us?
Okay, so what really happens is it's mainly non-deliverable forwards being traded in that space, really. Prior to now, it was the CBN being the major person, the major counterparty selling those contracts to banks and other investors. But now that it's been reintroduced, the banks will be available to quote for the short-dated contracts, that's from 1 month to about 12 months, while the CBN will be will be available to provide quotes to sell the 13 months to 60 months contracts, really. It's still going to be the non-deliverable forwards, really. So it's settled in Naira, of course, the difference. So that's really the major difference. And this should happen from next week. That's on the 10th of July when it comes into effect.
Can you give us a bit more insight? How does this really work? You said it's settled in Naira. It's supposed to be a futures market where I get in dollars. So could you give us a background? So how does it work? How does it really work?
Okay, so what happens is you come with your demand and you get quoted, you buy. For instance, you buy your NDF. You still have to source for your dollars in the spot market. But at the future date, what gets settled is the difference between where you purchase your spot and the forward rate, really. So it's just the differential. It's more like hedging for you.
So quite interesting there. So will this FX futures, the reopening of it, will it help to boost FX liquidity, the current situation? Will it help to salvage the situation?
So it's a yes and a no. It's a yes because yes, there is. Okay, so it's a yes because there are banks available and even the CBN available to quote, and yes, you can get your NDFs purchased and all of that. But again, I'll say it's a no because it's not like dollars is actually being delivered to you. You still have to source for dollars in the spot market. It's just the differential you're being guaranteed that you're hedging against. So it's a mix, really. There's no actual liquidity coming into that space because the dollar still has to be sourced in the spot market.
So has this FX situation, has it impacted trading in the fixed income space? I want to know the relationship, the interrelationship between FX trading and fixed income. Has it impacted investor sentiment in how they trade on the bonds or the treasury bills market or the OMO market? I mean, the bonds and the treasury bills market, I mean to say.
Yes, it's been a general positive sentiment with the harmonization of the rates. It just shows, okay, of course, there's been some sort of devaluation or should I say depreciation. So general market sentiment is positive as there is the move to harmonize the exchange rate to a single figure and all of that. So yes, it's been positive, and as a result of that, we've seen a lot more activities in the fixed income space. However, we don't know how sustainable that will be, and I think a few more things will change when we see the way the futures market plays out next week when it actually really commences.
So you talked about yields still going, just going back to that again. You know, we've gotten a new loan from the World Bank that's about to the tune of $800 million. With that loan, do you think Nigeria, the DMO, is going to still borrow more? What's the borrowing plan like? Are they going to stick to the borrowing plan in domestic markets?
So
especially with the debt profile climbing, that's in regards to that.
Yes. So the calendar for the Q3 auction is yet to be released. That's the issuance calendar for the bond auction for Q3 is yet to be released. We expect that to be released possibly this week or early next week, as the market looks to what will be done in the next few months, really. So we don't have a clear direction of that for a fact, but we look to hearing from the DMO.
Thank you so much, Ramat Baba, Treasurer, FBN Quest Merchant Bank, for sharing your insights on the program.
Thank you.
Now, sentiments in the domestic equities market that you mentioned yesterday turned negative. Forget the green that you see there. I'm sure the person there is probably being over-optimistic. But we've seen 60,000. We dropped from the 61,000 to the 60,000 level. We lost almost everything we gained in Tuesday's trading, in Monday's trading session. Now we see that the market cap still at 33. Volume, we're seeing that in the red, down from not a lot traded from what we saw Monday. Now 12.21 billion naira, and all transacted in 12,194 deals. Now if you look at the sectors, almost all in the red yesterday, except for the oil and gas, and this is as a result of Total Energy to gain 20 naira in yesterday's trading session. That propped that index up. Insurance sectors, we did see a drop in AXA Mansard, and industrial goods, Boa Cement did, do a thing to to pull back the market. Consumer goods, we saw Unilever, Pizza Cousins dropping that counter down. Banking sector, the tier 1 banking stocks were in the red yesterday. So we see the markets not performing as much as, in terms of the sectoral performance, not as much as we expected. But that's as a result of profit taking, which is highly expected especially from the gains that the market has made. We will see all that money and let it go.
You must take some off the table. And, seeing the deals there, quite interesting how much deals we're getting. These days.
It's not like a new level. That's what you expected,
It's like a weekly, amount.
So that's
quite interesting.
Fantastic trading from investors. And we do hope we'll get more when the foreign investors to come in.
All right, we're waiting for them. Thank you so much, Will. They're giving us the details from the NGX and the fixed income market. Let's look at other markets now, see what's happening with Bitcoin. They're still struggling to clear that 31,400 level, but it's still greed. That's what's the sentiment we're seeing in the market. Looking at the fear greed index of the market, there's 61 points. Greed been ranging from greed to neutral for the longest time now. So we're seeing investors quite bullish. Let's look at the top cryptocurrencies we track there. We see Bitcoin at 8 a.m. this morning holding up $30,833, down 0.50%, pullback there. Ethereum, all eyes on that $2,000 level. Is it going to hit it and stay above it? That's what every investor is watching out for now. 0.94% down. Binance coin there, 0.96% down. And we see the only gainer this morning on the top 100 coins, there's 0.34% gain for XRP, trying to get back above that 50-cent level. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Good morning.
Good morning, Ladi. Good morning.
It's still about regulation in this industry. And now we're seeing South Africa making big moves now. The pioneering crypto regulation with licenses for crypto exchanges. What are you hearing about this?
This is very good. It makes a whole lot of sense that Africa also has interest in all of the innovative tech that is going on regarding crypto and all of those things. And the fact that they are starting, I think it makes a whole lot of sense. South Africa, the Financial Sector Conduct Authority, that's the FSCA, has actually given directive that guys, if you want to operate in our country, you have to have a license. Failure to comply by this period, I think towards the end of the year, but you have to meet that objective by November 30th deadline. It's a compulsory thing that you need to do. Else, you'll be forced to close and also pay some fine. No doubt, South Africa has distinguished itself as a leader in the cryptocurrency regulation in the world. We can't even compare the US to that now, because the US is not having a direction on how they could bring all of these guys together and say, oh, this is what we want in our jurisdiction for us to protect investors. And it makes a whole lot of sense that Africa is being represented in all of these. And let's not also forget that South Africa, these are laws that are coming with. Just a few weeks ago, I think about 2 weeks now, 20 license application has actually hit the table of the SCA. It means that people are ready to comply with the regulations and also make things work. And also, let's not forget that South Africa has one of the cryptocurrency exchange platform in the world, one of the top 50. We only have one from Africa, which is Luno, which is now bought by Barry Silbert of Digital, the DCG guys, and it makes a whole lot of sense that in the picture, there's Africa there. So it brings us to understand that now in Nigeria, we need to also encourage local guys that are building. We have the guys that can build all of this, so that we give them this regulation to a license that government can also oversee and also make us have the benefits and also attract investors to our country, because we need all of this to work here in Nigeria. We need all of these guys to come and invest in Nigeria where they're having regulatory issues. Thank you, Ladi.
And definitely talk about regulatory issues. We know Binance, they've been in crosshairs with the SEC in the US. So I'm wondering which exchanges are jumping on the licenses from South Africa. Hello, Rume.
I can hear you, Ladi. Go ahead.
Yeah, so I said, Binance, they've been in, they've been crosshairs with the US SEC, regulatory issues with Binance.US. So with South Africa now, giving out these licenses, do you see Binance jumping on it and other top cryptocurrencies in the industry?
Yeah, that's more like kind of a very big opportunity to jump on the South African market. Binance has been through a lot. What do you expect? The biggest crypto exchange platform in the world, you must get attacks from different angles. The US is there. They're actually in court with the US watchdog right there. And also in France, they're also having issues there. I think the most recent one is Australia, where the watchdog actually got into their office to check a couple of things that they are doing wrongly on ground, right? It's not easy for Binance. In fact, I don't want to be a Binance right about now. I can imagine what Champagne Zhao CZ what is going through his head. He runs the biggest. So it's not easy, but I know all of this will happen for now, but later we'll see some clarity, because this industry, cryptocurrency, blockchain, Bitcoin, Web3 has come to stay, and there's nothing nobody can do about it.
Wow, well, the regulators have other ideas at this point, but let's see how, regulation works, for the second half of 2023. Thank you so much, Rume Ofi, financial market analyst.
Thank you, Ladi. It's my pleasure.
All right, let's look at top gainers. I will see Zilliqa topping the counter. Double-digit gain there, 10.80% up this morning, 2 cents. Zilliqa trying to start a bullish run. At this point, we've seen Aave also $79.03, up 5.67%. So we're seeing, DeFi platforms now on the top gainers counter. Who knows? Is that a new DeFi narrative coming up in this space? Let's look at the top losers. So see eCash topping that counter there. Fork of Bitcoin down 8.97%. And we see BSV, Aptos, and Optimism $1.29 down 3.90%. So we're still seeing greed in this market now. Still looking, for maybe we might see extreme greed at some point in 2023. Who knows how investor sentiment is going to go going forward. Well, that's how the market is looking today. That's the crypto market. Still greed right now. That's the show today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. And remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can watch all our production. Thank you for watching. Ladi Williams. Bye-bye.